Hi guys, I hope you're having a wonderful day wherever you are. Yet another edutainment session of Bullish Banter. We went in depth on what central banks mean for the currencies and how you can correlate whatever actions they do to your trading plan. So obviously we cover the one which has been quite significant, Japanese bank, of course, and what their actions and how they operate impacts their currency. Went ahead, of course, to cover home base, Kenya, CBK, and obviously the local BOS, and how their decisions and previous administration compared to the current one is reacting and handling the currency situation, all the way to, of course, what we expect the US election, upcoming election, of course, the central bank policies that they have released over the last 2 years and the implication to the dollar, and what to anticipate, at least in terms of the dollar index pricing, at least which has been strong the entire year, and what it might be going forward. So I hope you will enjoy this one and tune in. Hey Rufus, how are you doing?
I'm doing fine.
Yeah.
In this cold weather.
Yeah, definitely. El Nino is here with us, yeah?
Yeah.
You know, from Limuru, it's like winter is here, right?
Yeah, it's raining daily, very cold weather.
Yeah.
Yeah, but the markets are getting hotter.
Definitely. I think from the last conversation we had, we have been talking about, of course, on the podcast, there have been a lot of things that have happened. FOMC came out, Bank of England did their thing, and also Bank of Australia, Reserve Bank of Australia also, did a hike, which was not a surprise, expected, but weirdly surprising because of the timing, I guess.
Yeah, they are still a little bit slow. I feel like the RBA has been quite slow, especially considering its neighbor, New Zealand, has gone over 5%. So for them, being stuck at 4.35% is still significantly slow, and the markets were not taking it.
Okay.
Yeah.
You don't think that maybe, you see, I believe with the X now, and obviously faster channels of communication, there is I think we spoke about this earlier, whereby a contagion, perhaps maybe something gets into the wind and everyone literally catches the cold, So America started, of course, it has been hurting everyone else. And people are like, if America are doing it, maybe we should also do it. So maybe they are acting independent as they should, and therefore assessing the economic circumstance and making decisions based on that. Don't you think maybe that might be the case?
Well, for me, the way I visualize the central banks, each and every central bank is established under its laws and its jurisdiction. Mostly as an independent institution that drives monetary policy. So following what we have been seeing with major central banks, they've been hiking interest rates, but then the challenge is that the world reserve currency being run by the Fed is having higher interest rates. So as long as you are running your own central bank, let's say CBK is running its monetary policy, it has to be conversant with what's happening with the world reserve currency. So if the US hikes and keeps hiking, and you're not hiking, then it gets worse and worse for you. It becomes a more difficult job to address inflation without hiking interest rates higher. So in this case, if you are running a central bank that is not the Fed, then you must follow what the Fed is doing. Because if the yields in the US continue rising, then investors will start flowing away from your economy to the US. So in this case, it doesn't make sense to ignore what the Fed is doing. So while other central banks have been following, the ECB followed the US in holding rates, the Bank of England, Bank of Japan also held rates, and the Reserve Bank of New Zealand, Bank of Canada. So I think the exemption was only the Reserve Bank of Australia, and we can understand because for them they had kept interest rates much lower compared to the other central banks.
You find it interesting that this year alone, we have spoken a lot about relationship between central bank and central banks rather and the markets. And I think it has been quite interesting because not only do their pronouncements move the markets, that is on the time when they're supposed to release such, but whenever they are giving speeches, maybe in the World Economic Forum events, maybe they are being interviewed by a journalist or they're in a show somewhere, the markets have tended to react to them. I think maybe 2-3 years ago, the central banks were not that, star of the show. But right now, they are like the headliners of the market volatility. I think it was earlier in the year where there was this meme where if Powell comes to the mic, it will be green candles upon green candles, depending on which side you are of the market.
Yes.
Yeah. So as we wrap up the year, and of course, I think maybe 1 or 2 central bank speeches or rather policy directives are remaining. Next year, will we have maybe an year whereby you focus more on the technical, but also pay respect to whatever fundamentals are happening? Or it will still remain that the central bankers are the star of this market volatility?
Well, the way I think about it, if you're a forex trader, then you must know what central banks are doing. You must know their policies and how they transmit these policies to the economies. Central banks are the key drivers to forex rates. So if you're not following the central banks, you probably have no idea about the outlook of that currency. In that case, you are at a disadvantage against any other trader who knows that information. So in this case, if you ignore what the central banks are doing and just focus on the technicals, then you are at a disadvantage compared to other traders.
How frequent should a beginner be sort of paying attention to, this is a lot of information. I do not expect somebody who is maybe a student or working, a doctor perhaps, or an engineer, to go back to maybe some economic notebook and start reading about central banks. Perhaps how simplified can it be for one to get himself or herself familiar with when and how the central bank disseminate the information and put them into actionable plan?
I think I can simplify this. So the way we think about central banks, there are these, I would say, apex institutions that basically transmit monetary policy in an economy. So they have very simple mandates. The number one mandate for any central bank is to stabilize prices. So when you talk about inflation, it basically reflects on the changes of prices across the economy. So they also have a mandate to ensure economic growth. And of course, they have a mandate to ensure that there is full employment in an economy. So those are very simple mandates that they have to ensure that are being held within the economy. But then, as you all know, economies go through different cycles, and this requires different actions from central banks. So central banks have a set of monetary policy tools that they use to implement these mandates. So the first one is obviously interest rates. So central banks will tamper with interest rates within an economy in order to either accelerate economic growth or slow down the economy. So if an economy is doing really well and inflation is rising, most of the time the central banks will be raising interest rates. On the other hand, if the economy is really slow and let's say going into a recession, the central bank will be lowering interest rates to make the cost of capital cheaper and basically incentivize banks to lend more money and, of course, incentivize the people to borrow more and invest as well as consume this money. The other key thing that central banks use is bonds. So in the bonds market, they are the key players that basically issue as well as buy bonds. So by issuing bonds, central banks are basically borrowing locally. So borrowing locally means that people give money to the government and they get the bond certificates. So in that case, they're able to remove liquidity from the economy. So on the other hand, when central banks are buying more bonds from the market, they're basically buying these certificates and distributing cash to the economy, which basically increases the liquidity in the economy, and this can jack up the economy. You remember when the U.S. Federal Reserve was giving 1,400 stimmy checks?
So during the COVID period.
Yes, it was basically stimulating people to have more money and spend, and this would stimulate production and, of course, lead to a higher economic growth in the short run, even though we know that obviously that eventually leads to higher inflation.
Excellent.
Yeah.
There are these two terms which I know a lot of traders have been paying attention to, or if you have been in the market at least long enough, or you listen to Bloomberg or Yahoo Finance or whichever financial outlet, dovish and hawkish sentiments. And most of the time during polls after the release of the interest rate, or even, let's say, Bank of England governor was speaking, I think today, being on the, I believe it would be 8th of November.
Yeah.
Finance players will be keenly listening to the speech, but few people, rather from the analysts, then they will say maybe, okay, based on what he's alluding to, the data points he's looking at, and his opinion of what they should do, either increase the rate at which they'll be lending out or reduce it. Very few people have the ear, let's say, to say, okay, this is what they mean, and the market reacts differently. But this year, I think, over the last 3 cycles of maintaining of the interest rates, we have seen markets do different price action, not as expected, whereby if the sentiment is dovish, you expect maybe the price or the currency itself to maybe sort of strengthen. But I think it is the last sentiment where, I think on the 1st of November, where we had sort of, I mean, Paul is an advocate, so the speech will be quite plain. No signs of it. But the other members, the Kashkaris and Bollard have been quite outspoken in terms of their views of the economy. For a new trader, I'm speaking from their behalf because I know they find themselves in a pit of lions, whereby markets can be aggressive against you, but you not only need to understand the candlestick, you also need to know, okay, besides the FOMC, besides the NFP, besides the inflation, which is CPI, you might want to also pay attention. There might be a major speech coming by. So be prepared for it. How long should one, let's say, take before, let's say, getting familiar with such concepts in a way that you're able to manage your risk well and your investment funds?
Well, I think understanding central banks is key to trading. So you should take at least 1 month. 1 month is enough to learn everything you need to know about central banks.
Okay.
When it comes to things like dovish or being hawkish, I think they are very simple terms. They have Japanese origin, which is very figurative language. So when you think of a dove, it's usually a soft-spoken bird that is usually used to signify peace. Hawkish, I think it's in the US emblem, right? So it's basically...
No, that's an eagle.
Oh.
That's an eagle.
It got me right there.
Close, but not close.
The hawk is majorly known as a fierce hunter. So it basically shows volatility, violence, and so on. So if you think of monetary policy as a story, if the story remains relatively the same, there's not much change, we tend to define that as dovish, meaning that nothing changed, everything went as expected. But then when you hear an analyst say this was hawkish, means that it changes the story that was there. The story takes a new direction as a result of the proceedings of that event. So in that case, it tends to imply volatility, but it doesn't define the direction of the volatility.
Don't you find it interesting that Japan gave us a lot in the trading markets, from candlesticks to Heikenashi to Ichimoku cloud, and the other concepts within the industry, bulls and bears, hawks and doves? Like you wonder, like, how did you come up with all these very important names and features within the technical and mechanical analysis side, while the major players perhaps are the Americans and obviously the Europeans?
I think it boils back to the charting systems. So there are way different types of charting. There's histograms, there's bar charts, there's line charts, plot diagrams, and so on. But then the wide-scale adoption of candlesticks as a very common way of analyzing the markets brought this dominance of the Japanese language because the origin was Japanese.
Okay. Nice. Sticking with Japan, I think in the last 4 months we have heard of market operations, and sometimes you see that name, market operations, and I think we have spoken a little bit about, of course, that for a while. I know Kenya also has done, I think was it a month or so ago, whereby they injected almost 100 billion shillings to maintain liquidity in the Kenyan banking system. Traders love the volatility. I think that's a fact, because that is where you make your money. How do you recommend to a trader to make sure that not only is he capitalizing on that price action, but you are also cognizant of the fact that these guys will do something you have not seen on the economic calendar or in the news that it is upcoming, but you're able to, like a boat in a rocky sea, maneuver your way up to the shores?
Well, whenever I'm doing an introduction about trading, I try to help people understand the nature of the markets first. Okay, that will allow me to take this call.
Yep. Yeah. So in regards to market operations, I think it's pretty obvious that with Bank of Japan and how it has been performing and reacting to their weakening yen, I was talking to someone recently. I told them, Japanese yen to Kenya shilling is just 1v1. Yeah, but the economy is 100v1.
Yeah.
But you look at how their policymakers are actually handling it, you are impressed. Perhaps maybe something, I know we cannot borrow because of their production capacity, but something maybe we can look at, or our players can look at in the future, because they have been doing opposite of the world. Like I said earlier, some central banks do their own thing, and they are one of those players who are independent of action, independent of thought, and obviously philosophy in how they run the economy. But we can say it has worked for them, so no harm on that.
Yeah, the way I see it is that there's completely different metrics for Japan. They're majorly export-oriented economy. For us, we are net importers. Japan is a net exporter. So for them to keep the competitiveness similar to China, they have to continue depressing their currency. So the more their currency remains low, the cheaper their products become, and the more they sell to the rest of the world. So for them, it's very important to have a low-value currency, and at the same time, they have to keep the cost of capital very low. So high interest rates wouldn't do very well for the Japanese economy. That may explain why they have kept interest rates at negative 0.1% since 2014.
I guess in practical sense, 150 on the yen, US dollar yen, is not really a bad thing, because it means there is a potential of them intervening in the markets to maybe bring it down to the 130s, 140s. So, of course, on a purely technical side, Japanese yen, you'll be looking at areas, perhaps even, if possible, following the Japanese, let's say, news sources, so that they can indicate to you this particular action is being talked about, or they are discussing it, or they have actually set a date for implementation, and therefore you can be able to anticipate when the yen will definitely gain some strength, and therefore you have those maybe short opportunities in the markets, right?
Well, the way it works in economics, it's yin-yang. So every good deed has a bad side to it. So as much as they are keeping the cost of capital significantly low, but then it's also making their imports very expensive. So for any players in Japan that are relying on imports either for business or consumption, they are becoming even more increasingly expensive. For instance, being down around 30% against the dollar in the last 2 years. Basically means that the people in Japan have to spend more to import dollar-denominated goods and services. So in that case, it's a bad side for them. But then they also have the other side where they're taking advantage of it. To link that with what is happening in the US, I think they are one of the largest holders of US bonds. So that is a major impact on particularly the strength of the dollar, right? Now, hypothetically, if Bank of Japan says they have dumped or sold 200 or let's say 500 billion worth of US bonds, what would that mean for the US dollar? Well, that would cause potentially a slight credit event, majorly not because of the action of the Bank of Japan, but as a result of what it implies to the rest of the market. So if the Bank of Japan is reducing its holdings in US treasuries, then a lot of other market participants might head in the same direction, causing a wide-scale sell-off of US treasuries. So in that case, it would be bad. It would most probably even cause something similar to what happened in 2007, 2008.
Okay. Now, on the other side, you said it's a yin-yang, right? On the yen, what would it mean for the yen?
Obviously, it would strengthen the yen, definitely.
Now, sticking with the bonds, recently, there has been a lot of bond talk. I think this market is a cyclical topic market. We at some point in the year, if you didn't mention AI in your conversation,
Yeah.
you probably are in the wrong business. Huh?
Yeah.
Bonds right now are every trader, especially on the indices, have been risk off. Maybe staying away, going to treasuries because of the high yields return.
Yeah.
And sometimes, for traders, you might not really be interested in what is happening in the treasuries, but you definitely would want to know if you want to find opportunities or manage your risk, at least to not have a negative account balance.
Yeah.
How do you comprehend whatever is happening on the yields rate or bond yields rates to particular currencies in the markets?
Well, I would say that bonds are key factors, or the bond market is a key factor to how a currency is performing. So, for instance, we have seen a very strong dollar in the international markets as well as the US markets over the last 2 years.
Yeah.
So the main reason we have been seeing these is as a result of the fastest rate hike possible, where the Fed hiked interest rates from 0.1 to 5.50% within a span of about 18 months. So this had the impact of raising bond yields in the US, where the short-term bonds, let's say 1 month treasuries, 3 month, have basically surpassed 5.5%. So with this kind of return, which is majorly considered as risk-free, investors find it easier to just deposit money in a bond and basically make this risk-free return vis-a-vis investing in, let's say, equities markets, which have not been performing particularly well.
Yeah.
We all know that the Magnificent Seven or the top AI stocks have been driving the growth, but a majority of the S&P 500 stocks have been losing over the year or dismal performance. So in this case, comparing the risk that you are taking investing in a stock versus the return, and then the low risk versus the high return in bonds,
it's pretty obvious.
Yeah, it has been a one-directional flow.
Yeah.
Where a lot of capital is flowing into bonds. So with this kind of performance, then it also becomes increasingly difficult for an investor to justify investing money in a foreign bond in a weaker economy that is offering lower rates and their currency is losing against the dollar. So as much as there is the yield coming from the bonds, there's also the FX gain, where if you hold your cash in dollars, you tend to protect your purchasing power compared to when you hold in Kenya shilling, the yen, the GBP, the euro, and so on. So, for instance, if you are in the Eurozone and you invest in an American bond, you'll get the forex gain from the euro losing against the dollar, plus the yield coming from that bond. So in that case, it makes it extremely attractive, which basically leads to a sell-off in other assets.
Yeah, probably latest evidence of such is when Berkshire Hathaway released their Q3 report, I guess. And they had almost a record $157 billion in cash. And everyone was surprised that, of course, Buffett has been investing perhaps in only treasuries and not really finding value stocks as his modus operandi is in finding opportunities. That really, I think that was a sign to the market that if the top investor is just sticking with the energies and his already existing portfolio and not really loading up more positions, it is a sign of maybe wait and see until the economy shows some signs of positivity, right? Yeah.
Well, I think it's a red flag. If Warren Buffett is making $9 billion from bond yields alone, it basically means that he foresees something negative in the near future. And we all know his strategy. He buys when the markets are tanked. In order for you to buy when the markets have completely tanked, you need cash. And he's not looking to sell equities when the markets are all the way down. So he has been holding cash, waiting for that opportune moment. When the markets crash, then he buys at very low valuations. So as a value player, I think that's already a red flag if he's making record profits from bond yields.
Yeah, interesting. Bringing it back home, there is blood in NSC. Everyone is exiting. And I think this discussion has been going on a while, whereby people are saying, which stocks should I buy in Kenya? Why? Because they are low. I think Safaricom right now is trading at around 11.5 shillings. If the way the price is going, we might hit the IPO price.
Yeah.
And I don't know. I mean, if it hits the IPO and you bought it at IPO and you have held it for 10 years, I was actually thinking, investing in Kenya, is it worth it sticking in for dividends?
Yes.
Because capital gains will be not really coming by. How do you, let's say, balance between getting in for the dividend, sole purpose of dividends, and not capital price appreciation? Because even the dividend payout is not the same as a company like, say, Amazon will be paying, or Apple and the rest.
Well, I think dividends should not be separated from capital gains, majorly because when I'm looking at investing, especially in American companies, you'll notice that some companies issue dividends, others don't. But then that doesn't change the way investors treat these companies. They look at the valuation, the outlook, the rate of earnings. If a company makes earnings, some of the earnings will either end up in the valuation of the company or in dividends, which both benefits the investor. So in this case, when I'm looking at the NSE, I'm majorly focused on the outlook. What is the outlook of this company over the next 3, 4, 5 years? Do you think the company will have grown, multiplied by this X factor? So that's one of the key considerations when you're looking at the companies in the NSE. So rather than focusing on the dividends and the rate of dividends growth, I think focusing on the business is more important. So looking at the outlook of Safaricom, I think they have some pretty interesting products, especially when you look at things like M-Pesa Global, Ethiopia expansion, focus on fixed home internet in Kenya, 5G adoption and all that. So in this case, with the current move they are making to enhance smartphone adoption in Kenya, I think the outlook is really good. But then you also have to look at the macro. Will the people be able to buy as much as of those products they were doing before? So the economy is not in a very good spot, especially considering the taxation, high cost of living. So that's quite a challenge. So if you're seeing the stock going down, I think I recently saw 11.5 shillings per share. The further down it goes, the more interesting it becomes. So for any investors looking at Safaricom, I would think looking at the outlook versus the economy would make more sense. And I think at these valuations, it's a pretty interesting idea to invest in.
Okay. Now, Central Bank of Kenya, I think recently they have come out to say that the Kenya shilling is overvalued. Do you hold that brief sentiment, or about that? And I think the likely solutions, as I put it some time back, are quite hard because they are political, and I do not really want to dwell into that. What is your view of because based on what we heard from the economic experts and, of course, finance analysts in Kenya, they view the debt situation as way bloated. But they also view, so long as they are able to commit to the major debtors and maybe negotiate with the small debtors, the economy can sort of rock the boat until the shores. What is your view on how the state of Kenya is, at least after the last discussion?
Well,
the developments.
From the CBK governor, Kamau Thuke, he basically said that the previous administration, and this is referring to the previous central bank governor, he basically managed the forex, trying to support the shilling over the time. This is nothing new. Other central banks all do this all the time. So it's not something that is special to Kenya.
Or illegal.
And I believe that's something that should be done. If you can defend your currency, do it by all means.
I mean, Japan is doing it
in
a way. So I find it, but that's a good point, because why would you find that not okay? And I think economics is not a fixed, how do I put it, a fixed discipline whereby whatever somebody does is the law of the land. I mean, so if there is a empirical evidence to suggest otherwise, I think that is something that can do, because I think if we are a net importer, it would be to our advantage if the currency can hold strong against the others. Of course, not good in terms of maybe valuation from those who prefer democratic market, but at least the locals are happy, so maybe they have more disposable income to spend on other ventures, I guess.
Exactly. So I see no problem with defending the currency.
Yeah.
The issue we've been having is more fiscal than monetary. We have hiked interest rates to a record high at 10.5%. Cost of borrowing has really gone up, which has basically has the effect of pulling money out of the economy. We have seen bond subscriptions rising, especially from the private sector. And we are almost getting to, 1 trillion new investments in bonds, meaning that a lot of liquidity is going back to the government rather than the excess liquidity we had causing inflation. But then, when you look at the fiscal side, the government has been so much spendthrift that it caused our currency to depreciate. So when the government is just spending more and more and more,
maybe on recurrent as opposed to economic factors,
yes,
or boosters.
Yes, we have seen a lot of corruption, a lot of money being stolen.
Yeah.
We have seen a lot of government expansion. This scene where the government is becoming more and more welfare government, trying to support here, there, expanding the budget. It has the overall effect of weakening the currency. So while the central bank is doing its best to try and manage the situation as is,
the inflation side of
if we don't check the fiscal side, then it basically cancels out the effort. So on the outlook, I think the Kenya shilling might continue losing until we control the spending problem. So the central bank has done its job, but I think the parliament has not done its job.
I think not to, I don't know if it's disgusting as passions on Kenya, but Biden also is doing the same thing, the Bidenomics.
Yes.
It has been involved with a lot of expansion in terms of spending. And I believe with the current Speaker of the House, we might see a significant, stringent budget cuts to its administration. Definitely that is what I would be looking at, especially on the dollar index, which is now trading at 105 point something.
Well, for the US, we can give them the vote they deserve.
Yeah.
They have a very strong opposition. They were able to force the government into a corner. They almost went into a government shutdown, where the opposition was pretty strong about cutting the fiscal spending. But here in Kenya, I don't think our opposition is that strong. So as long as the leading administration can spend as much as they want and then keep on borrowing more, then it doesn't resolve our problem.
Okay.
So the outlook could actually get us to, let's say, 200 shillings per dollar. And this could be as early as mid-2024.
Doesn't that also has the resultant effect of hoarding? Whereby, because anyone who earns in dollars does not want to deal in Kenya shilling. You will actually prefer to keep it that way.
Yes.
Maybe have like one lock away for USD, and then maybe one that you can use for your recurrent expenditure.
Yeah, that's what people and organizations are doing. They are basically holding dollars. And whenever they want to do any check-in transactions, that's when they spend Kenya shillings. They convert a small amount of dollars into Kenya shillings. They spend, but a majority of the reserve stays in dollars because they want to protect their purchasing power. And they have every right to do that.
I guess what I'm alluding to now is we might not like politics per se, but it plays a part in the financial markets. Case in point, the previous governor in Kenya was quite conservative, and I would say he was dovish in terms of his sentiments and how he runs CBK and interest rate policy and obviously inflation. While the one we have right now is more hawkish, meaning that he prefers tighter interest rate, tighter financial situation and even interbank trade rates. Similar, if I go to US, I think the deputy governor at the moment, assistant deputy to Powell, is a conservative, not conservative rather, but a hawk. While Powell is more of a dovish. It's only that the situation have drove him to where it is now. So I know, as I wrap up what I'm trying to say, we are approaching, of course, the US election, and obviously there has been talks that if Trump, however magically makes it to win those cases, if he comes in, Powell will definitely be out of the door, even though the contract ends, I think it is 2026. And the next governor, who is quite hawkish, will come into play. And maybe they reduce it to around 3.5 thereabout. and then hold it there and see how the economy fares.
Well, come to think of it, I was reading an article this morning, and this analyst was saying that the current president is increasingly becoming senile, so he might not be able to run for the next.
Okay.
And then he says that by the time we get to the next election, that's November next year, there's also a likelihood that Trump might be in prison. So,
all the leading candidates might not be there by next year.
Yes. Yeah. So it's a wild time to be participating in the markets today. But the most important thing is the overall picture. So overall picture from the Fed Reserve Chair, Jerome Powell, is basically saying that interest rates will have to stay higher for longer. And this is encouraging more people to buy short-term US treasuries. I also covered something about the euro-dollar market, where this one is not US controlled. And of course, in these markets, they usually require collaterals to support derivatives. And right now, they're not accepting those long-term collaterals. So you won't deposit, let's say, a 10-year bond with them for you to run derivatives, because the 10-year bond has really lost its value because of the rise in interest rates. So in this case, they're preferring short-term treasuries, which is the 1 month, 3 month, 6 months treasuries. So as a result of that, a lot of financial institutions globally, especially in London, Tokyo, they've had to buy more short-term US treasuries, which is basically driving dollar scarcity. And as a result of that, there's this outlook that we could continue seeing a much stronger dollar. And of course, we know what that means for the Kenya shilling.
Yeah, definitely. Yeah. It's at least now you know for our listeners. So I think maybe I believe what we had last week, that is FOMC and FP and everything, was a price correction, as it should be. It was long overdue. We have had a strong dollar entire year. So having that was a good breather to the market. Hopefully to the traders now, you can learn from the central bank information you have gotten today. Any question will be welcome, but more importantly, be able to pay attention to it so that you're able to align your positions or obviously your risk side in a more sustainable way.
So my parting remarks is, if you're a trader out there, you've just begun your journey in trading, or if you're an intermediate trader and you're just trying to finesse your skill, you have to become more of a market analyst. And the key to forex trading, you really have to understand how central banks functions and how their policies basically impact the valuation of currencies. That would take you a long way.
That is a good way to end it. I hope we will see you and respond to your queries, of course, on the comments, and more importantly, all the resources and obviously references used in this podcast. We try to share them on X and any other social media platform where we find them. So follow us, and we hope we impart knowledge and entertainment to you as well.
Awesome. And if you're looking to open a trading account with FXPesa, you should find the link below. And of course, make sure to share your feedback about the podcast. If you have any questions, reach out to us. And we are happy to respond to these questions on our proceeding podcast.
Adios.